All right, everybody, welcome back to Matty Moolah channel. Hope you guys are doing extremely well. Important week for the Cash Flow Chronicles. We're going to be talking quite a bit about two companies which I own specifically. I don't think that Chris owns a big portion of them, but we're going to be talking about Rocket Lab, and we're going to be talking about we'll also be talking about Disney, which I think Chris and I both own, but we'll also be talking about Dutch Bros, which actually reports tomorrow, and Rocket Lab reports on Wednesday. So I do want to hop in specifically, show you guys the calendar. For those of you guys that do follow the Cash Flow Chronicles here, we do try to report, especially with respect to earnings, all these different things. So if you guys, and I try to post this on X, so if you guys are ever curious to hear about a specific stock or anything like that, this is kind of our schedule. It's not guaranteed by any means, but we try to put things in here that would be pertinent to topics that we discover and discuss on the channel. So, of course, if you also want guests, feel free. We have some guests from Chit Chat Money coming to talk about Nintendo with us tomorrow, but I will most likely be covering the Bros, because Bros is my stock, and I'm all about it. So before we hop over to that specifically, I want to give a brief update about what I think earnings will look like for both Dutch Bros and for Rocket Lab. So we'll start off with the Bros, because that reports tomorrow. And so this was the outlook that was provided by management. And so expecting about 150 new stores for fiscal year 23, revenue of just about 960 to $1 billion. CapEx being 225 to 250, and adjusted EBITDA being about 135, 140. So I've just done some quick numbers, and so excuse me while I look off to the camera, because I have some of these numbers on the side, but I'm just kind of looking at what you should expect just based off of seasonality in terms of revenue and same store growth, as well as just new store openings. And I didn't put too much rigor into this, but my anticipation for fiscal year 2023 is we'll end up at the 960-ish range for revenue, so kind of on this lower end. Now, I'd be very surprised they come in and beat this. Specifically, what I'm looking for tomorrow is about 258 in terms of revenue. And so that's about a 29, almost 30% growth year over year from about 199 last year in 3Q 2022. So that would be good to see. I'm expecting them to open up about 41 stores this quarter alone, getting you just shy of 800 total stores at 795. So that's where I'm anticipating, and that'll be up from about 641 stores. And the year-over-year growth on the store count will be about 24%. Now, generally speaking, they average about 5 to 6% in terms of quarter-over-quarter store growth. And so that is anticipating about 5.4, which is in line with what they did going from 1Q to 2Q. So give or take a little bit. So my anticipation is for fiscal year, they're going to open up about 154 stores, so just above this 150 mark that they have on here. And with that, I think you'll end up doing pretty well with it. But I think that just based off of what's going on in the economy these days, people might be pinching back a little bit. And so not entirely sure if that's been showing up in terms of revenue or anything like that in Bros. And I haven't really seen or heard anything from the previous two conference calls I listened to. But that just being said, I know they're trying to experiment with decreasing the amount of capital expenditures they're putting out into the market. And I know that they did some discussions, and they actually did a $300 million listing for secondary offering to be able to get a little bit more cash through the door. And so my big thoughts are, I don't think people are going to be overwhelmed with the revenue. I could be wrong on that. What I think will really make the difference is the discussion around future progression of CapEx. At what point do they anticipate to be really break even in terms of the amount of cash flow from operations and capital expenditures? My hope is that would kind of be in the first half of 2024. And so my anticipation is if it's beyond that, I think the stock will take a pretty big hit, probably in the order of 10 to 15%. So that's just a quick thought. But if they are getting closer and closer to that break even part of, and what I mean by that is basically this EBITDA or adjusted EBITDA, which reduces the impact of share-based compensation by this capital expenditure, you're hoping to kind of get to a point where on a trailing 12-month basis, this is kind of covered. And so my hope is that with the recent stores opening up and the stores that will open up in 1Q and 2Q, you'll be able to get enough EBITDA growth where this is going to get close to and closer to cash flow break even. So that's maybe a little bit me being optimistic. And I don't think it'll be too big of a deal if it goes into the second half of 2024. But if by 2025 that EBITDA break even doesn't really show up, I think the stock will get hit a little bit harder just based off the environment that we're in. So that's just some thoughts there. So we'll see what happens with Bros, and we'll discuss it obviously tomorrow on Cash Flow Chronicles, and the link for that will be in the description. Now, I also want to talk about Rocket Lab. Rocket Lab is a company that I also own percentages in, and I have some numbers on that as well. These guys actually, let me pull that up because I forgot to. These guys actually revised guidance, and reason being is for those of you guys that follow the stock closely, let me just pull this up first. They were anticipating about 3 launches in 3Q. So this is the 2Q earnings where they were kind of looking forward. So they're expecting revenue anywhere between 73 to 77 million, with Space Systems being about 43 to 47. So a good chunk of that 73 to 77 million. They're anticipating launch revenue being a little bit higher than when it actually ended up coming through, because they were expecting to do another launch at the end of the month of September. And unfortunately, due to the failure in the second stage ignition sequence of one of the launches prior to that additional launch, it didn't work out. So that being said, the FAA as well as Rocket Lab did an investigation, and now they're proposing that they are ready to go forth with launches again. And so my thought process is, and that obviously had an impact to the revised Q3 outlook that they had, so I'll get to that in a second. My anticipation is that's going to put a hindrance not only just on the Q3 outlook, but also Q4. Here we are entering almost the middle of the fourth quarter. The beginning of the middle of the fourth quarter is starting next week, right? So if that ends up happening, then you're going to be troubled, just kind of stating it, for revenue kind of coming in the fourth quarter. So that's also going to take an impact on the potential outlook for the company. Now, talking specifically about how Q3 will be impacted, that one less launch means they're going to end up with about $22 million worth of launch revenue versus the $30 million that they guided for. So they were expecting the 73 to 77 million in terms of Q3 revenue. That's obviously going to be revised down to 66 to 68. I'm anticipating it's going to be 68. I think that the Space Systems will probably cover this. They'll end up on the mid to high range of this, and so things will probably be okay with respect to that. What I'm really curious about, though, is looking at the margins, and will they actually meet their expectations from a GAAP or non-GAAP perspective? Because if you're looking at these, this is actually pretty good. The mid to high 20s in terms of non-GAAP margins, that's looking pretty healthy. And so as we continue to grow, obviously that'll get closer and closer to maybe the mid 30s or even the 40s, which will be astonishing. But that's something to kind of be discussing down the road. But what I then wanted to look at specifically for this, and this is where I kind of get into some of the numbers with respect to Rocket Lab and how I think it's going to end up performing, is, so we have the 68 million kind of anticipation. I'm agreeing with the 68 million revenue kind of coming in. That's only a $6 million increase quarter over quarter. So just under 10% growth quarter over quarter. Not so bueno there. Actually, not even 10% quarter over quarter. It's 10%. Let me just double check my numbers here. I think that's 10%. No, that is quarter over quarter. Okay, so 10% quarter over quarter there. And then let me just double check these numbers. So it's only like a 7-8% year over year. So you're really seeing that flattening out of that number. And what I really want to think about now is, will we break $250 million for revenue in fiscal year 2023? And I think that's going to be challenged. I think we might get to 245. And the sad thing is that's only a 16% increase year over year. And so you're really starting to see a flattening out of the revenue curve on this. And so unless you anticipate Space Systems to increase their gross margin that they sell, as well as just the cadence in which they launch, then this is going to be challenged kind of going into 2024, really relying on Neutron to kind of come in and save the day. So my hope is they increase launch cadence quite a bit. I'm anticipating that fourth quarter revenue, just based off where we are today, we might get 1 to 2 launches in. I think that will only end up being about $14 million of revenue kind of coming through the door this quarter. Because I anticipate we might get 14, we might get $21 million from launch, but we're not going to be getting 30 or 35 or $38 million from launch. And so coupling that with Space Systems, about $40 to $45 million, you're looking at close to $60 million in terms of revenue for the fourth quarter. So that's actually a decrease quarter over quarter, going from 68 to 60 million, just based off that launch cadence, and having one less launch in the quarter really is going to start to show a pretty big impact there of 12% quarter over quarter. And then that's only a 16% increase year over year from the fourth quarter of last year, where they made $52 million in revenue. So just gives you a little bit of thought with respect to what's kind of on the horizon. I think Rocket Lab is kind of going into a challenging quarter for reporting, obviously because of the first revised revision of launch, which I think impacted the stock. You saw it kind of come down pretty significantly after that announcement. But I think it's really going to be dependent on Peter Beck's verbiage in the Q&A section. How's Neutron looking? How's the capital expenditure? How's the cash burn? They also mentioned earlier this week that Astra is having trouble with respect to refinancing and just paying debt as a whole. So how does that look from a backlog perspective, going from, say, Astra to Rocket Lab? How does that help from a small launch perspective? Knowing that Relativity is now going to medium launch. They are no longer doing the small launch. Astra was mostly the one that was focusing still on small launch. So you have these things that are benefiting in the long term for Rocket Lab, but short-term struggles in terms of continuing to get launch cadence and what have you. So my thought process is Neutron really throwing a wrench into things? Is it really customer readiness that's putting a damper on things? Obviously, we know the failure that happened in Q3 put a pause for things, but it seemed like that they were getting on a relatively good cadence in terms of getting 1 or even sometimes 2 launches per month. Are we going to get back to that cadence, knowing that we're only at a 12 to 15 launch per year, when we have the opportunity to launch closer to 150 something a year at max capacity? Just knowing that, at least at the time being, they've said 1 launch per week per pad, and there are 3 pads, 2 in New Zealand, 1 in Virginia. So at the moment, we're only running at 10% capacity. Are we well suited for the future? How is it going to look when Neutron comes in? Small things like that, which I think will truly impact the stock. So it's going to look challenging, I think, for both companies, Rocket Lab and Dutch Bros. I feel a little bit more confident going in for Bros tomorrow. And then Rocket Lab, I think just with the major stepbacks and the impact that we haven't had a launch yet here in Q4 for them, I think is going to end up with a revised fiscal year 2023 guidance. So that being said, they also provided an uplifting 2024 guidance that might also help the share price as well for Rocket Lab. So anyway, I just wanted to tune in. I think it's going to be great. We're going to be discussing both on Cash Flow Chronicles. So Dutch Bros, catch us tomorrow with Nintendo. Check in as well with Chit Chat Money. And then Wednesday, we're going to be discussing Disney as well as Rocket Lab. I'll leave the links for both of those in the description. And yeah, hope this video finds you guys well. We're in the new house, so apologies for the bare walls and everything of the like. And hopefully we'll get everything sort of situated soon so it doesn't look as bare. Talk to you guys soon, and hopefully see you guys tomorrow night. Cheers.